Welcome back, Breakaway Wealth. I'm your host, Jim Oliver, and with me today is Dr. Vikram Raya. Welcome, Vikram.
Thanks, Jim. Love to be here.
And, you have a great, interesting background. Not only are you a medical doctor and a cardiologist, but you're also a real estate investor. That seems like an interesting combination.
That's right. Yeah. On career day when I was in elementary school, I didn't write down real estate investor, but it's sort of something you evolve into sometimes. So it's an interesting journey. And it was something that I discovered along the way. I assumed my destiny was to become a cardiologist and really help people with heart disease, and which I did for almost a decade. But I just found that I had other loves and passions, and also I wanted to practice medicine in a different way, but I wanted the financial means to do so. And so first, I'll just give you a 30-second soundbite on how I evolved as a doctor. Initially, it's a pill for an ill. People have problems, you fix the problems or you stabilize the problems, and they quote unquote are okay. I realized that a lot of these problems are self-induced or lower lifestyle in nature. And by us going upstream and educating the person on things and helping them, heal the whole system, they can really eventually resolve a lot of these medical issues once and for all. And so that practice is called functional medicine. And to open up a clinic like that, which is usually cash-based, was a risk. And so that's what was the initial impetus for me to explore other options of earning income outside of medicine, because to do that was sort of a protectionary way of doing things. So I tried options trading, Jim.
Yeah,
I wasn't very good at it. I looked at other businesses, franchises, and a few things, but it seemed like real estate made sense. And obviously the books that a lot of your listeners have probably read, including, Rich Dad, Poor Dad, Cash Flow Quadrant, all these things. And so going to real estate clubs, doing this, learning to invest. And then I created a small portfolio with my father in Atlanta, who's been instrumental in some of my early real estate success. And that was good. And that's usually where most people stop in the real estate journey. But then I heard this guy speak about multifamily and syndications and raising capital and buying 100 units and 200 units. And that intrigued my imagination. And so while practicing full-time cardiology and studying to be this functional doctor, I started doing the real estate in a different way, which is multifamily. And that has led to where we are now.
That's really cool. There's a lot of things that you said in there, a couple of things that I want to get back to too, because the courage to pay for medical school and go through medical school and put the time in and then change directions in your career takes a lot of courage. And that's really what this podcast is about, breaking away. So I want to get to that, but I want to get to that in a few minutes. I want to go back to maybe it was from your father, but you go to medical school and you can go to medical school for, I don't know what, up to 17 years. And there's no business courses. They don't teach you how to be a business person. There's not really a lot of economics or anything else, but you're running this multi-million-dollar business or potentially multi-million dollars. And they don't really teach you how to do that. So where did you get that confidence to say, okay, I know I haven't been trained for this. I know I spent 17 years learning how the body works and how specifically how the heart works, right? And how to treat, like you said, treat it, but also maybe more preventative. And I love that you were thinking outside the box in the way that medicine trained you. But where did that courage come from to just totally change directions there?
Initially, I didn't have money for coaches or mentors. So my coaches and mentors were books, right? And it was also looking at people I admired. And I just felt there's something greater inside me. And no disrespect to all the amazing W-2 professionals out there, whether you're a lawyer, dentist, doctor, but I just felt, I guess I was surrounded by people who went to MBA school, investment banking and all that. And I looked at them with awe. I'm like, man, could I create something like that? And so I just knew that I wanted to do something different and something big that would have the two eyes that you guys focus on here on the podcast: income and impact.
Yeah.
And so, in my journey to explore all these things, so I started practicing like most of your people listening probably started earning money way before I did, right? My first real paycheck, like the paycheck, came at age 33.
Wow.
So
Wow.
that means I was poor from like my first job was at Ruby Tuesdays, earning $4 an hour, and when I was 32, I was earning maybe 40K a year as a resident or fellow. So I never really had that, and my parents fought a lot about money, and so I knew I had to figure this thing out. And the interesting thing I noticed is the doctors of this generation were being treated differently. They were experiencing, I guess, financial success in a different way. They were not, I mean, the doctors of yore were, they were multimillionaires or very successful. And that's what, as immigrant parents, my parents saw that and they're like, oh, we should encourage our children to become doctors. Those were the guys who quote unquote made it. But when the reality was, when I saw that, I was like, man, these guys are working like dogs. Half the things they're doing are probably not even the right things to do because they're doing it for money. And, they don't have job satisfaction. They're not fulfilled a lot of times. And so I made a promise to myself, if I'm still practicing traditional medicine by the age of 40, something went terribly wrong. And I made that at 33. And so that was sort of just a shot in the dark. Hey, look, I'm going to figure this out. And that's in the real estate journey. I just analyzed where's the most money being made among all the people I know. And it seemed like real estate, everyone who was really successful always had some kind of real estate presence. So I was like, that's it. And it was not my intention to essentially replace my income, but over time, it's an addiction. You sort of enjoy it. You get good at it. And initially it was just non-traditional education. So real estate investment associations meeting, it's talking to mentors, it's talking to people. And eventually I had to muster up the courage to hire a coach. And so these coaches and people, look, there's a man's experience of 30 years. If he can give that to you in a short amount of time, and you can avoid his mistakes and you can accelerate his success, man, that's a steal.
Yeah.
that's sort of what encouraged me.
Yeah, that's worth more than most college educations times 10. I agree with you, because it's interesting that you said your mentors were books, because that's who my mentors were too. The people that I would consider mentors, some of them I've never met, some of them wouldn't, they obviously don't know me, but they impacted my life by showing me that there was a different way. And I agree with you in all the books that you mentioned. I think Robert Kiyosaki has been so instrumental in so many lives and in getting people to think differently. And one of my mentors that I did meet was a great person, R. Nelson Nash, would always say it's all about how you think. And but when you change your thinking, then you got to change your actions. And the only reason people don't act is they have fear, right? Is there a fear of failing or fear of success or fear of something going wrong? And the only thing that cures fear is action, right? So I love that you went to these real estate meetups, and doctors being highly paid W-2 employees are highly paid. They're really financial slaves in a way, because they're slaves to that medicine. And you said it. I mean, the doctors that are 65, 70, they were multimillionaires because, let's say that they were gastroenterologists, they were getting $3,000 or $35, whatever the back in the heyday, right? Now they're lucky to get half of that or less.
So I'll give you an example, Jim. Like, to put a cardiovascular stent in right now, which is a very complex procedure. I mean, you have to go in through the artery, through a leg, or through a wrist, weave a plastic catheter inside a person's living, beating heart, and then deliver a stent. You'd think, oh, probably, a couple of $1,000s. And it was back in the day. Now it's $100.
Are you serious?
So an Uber driver may make more money from a long trip than a cardiologist will make for putting a life-saving stent.
There's something wrong with that, because we're going to have a hard time attracting our best and brightest to those positions in the future with those kinds of.
And so that incentivizes, whether you're a lawyer and you have to do 30 legal briefs because now your reimbursement got cut in half, or you're, a dentist and you have to do twice as many cleanings or so it's just that the false assumption of the inputs, one input equals one output. That's what I wanted to get away from, time for money kind of thing. So once I broke the time for money equation and I realized it's knowledge for money, or it's results for money, then the whole world opened up to me. And so it's really exploring that, and I realized I can't expect the world to be better. I have to be better. And so I kept on, while my friends were taking luxury vacations and doing other things, and they were going on guys trips, I was going on real estate conferences. While they were they're going on cruises, I would go to meetups, and I would learn, or I'd use my time off to go to cities to learn about the markets there. And all of that, now I'm in a position where I don't have to work anymore, and they're still cranking it out. So it's almost like you want to make your life hard early so your life is easy later on, right? So
no, that totally makes sense. And you know what, you're right. You're sometimes, because they really don't know what they don't know, is people believe that, hey, these doctors, even if you're making $1 million a year, what do you have to do for that $1 million? I mean, there's a lot that you have to do. There's a lot of risk. There's a lot of stress. There's a lot of, and when you get into the real estate business, I don't like to just say real estate investor, because it is a business, right? Is you can make a lot more money with a lot less stress and a lot less risk, really. I mean, I was at a real estate workshop over the weekend, and there was 100 people in the room, and I thought to myself, it was a ridiculously low amount. I mean, this person takes all this money and puts it towards their foundation, Logan Rankin, and Logan had 100 people in the room. He charged $1,500 per person. And I thought, gosh, you should be charging like 10 grand per person, because just a few things that you get from that. But, and sometimes there are people in the audience that are sitting there saying, I don't have the time. I don't have that drive to go build my own real estate. So I kind of like what you're doing, and what, because I love your passion for like breaking away. And I can imagine your parents being immigrants and saying, hey, my kid became a doctor, like celebration time, right? And then my kid saying, hey, I don't want to be a doctor anymore. I want to do this.
My mom's face was priceless when I told her, like, I'm going to transition to different things. But that being said, look, I think in this day and age, each person will probably have 8 or 9 careers in their life. And the old way of like, all right, a legacy career with a pension and all that, that's done. So I see people reinventing themselves all day long. And I think the goal is to have optionality, Jim. I want your listeners, people who follow me on all my different tribes, I want optionality. So learn multiple things, be adaptable, be flexible, and realize that delayed gratification doesn't end when you get your first job. That delayed gratification keeps going, but you can still enjoy life, but realize that you reinvest in yourself. And as Warren Buffett says, that's a 30x return on your money.
Right. Yeah. So let's talk about the real estate part of it, and how, like, because I think what's really fascinating to me in any business but real estate is, somebody can get into real estate and one person gravitates towards mobile home storage, multifamily. It could be multifamily in this market, in this play, and they underwrite things this way, and they get creative financing this way, or they use private equity for all of their stuff, or they syndicate. And it's kind of, you find your path and your passion. So talk about that, like what you found and why you do what you're doing, and how that journey kind of happened.
Sure. I want to introduce a concept to your audience. I call it the multiple incomes, right? So one is your active income, your W-2 income. Then, you've been taught, hey, you want to diversify that into passive and portfolio income. So, so that's, typical passive income is, sometimes stocks, sometimes real estate in general, and then, maybe even oil and gas and things like that. Then there's something called passion income. So you take that, and then now what do you geek out about? What are you so excited about? Like, you love this podcast, you love educating, mentoring, maybe you have a coaching and training, I don't know. So I do. So I have a passion now to help doctors all over the country, achieve success in business and life. And so I do that with my coaching program, Limitless MD. And I have a podcast and I have a whole, thing. And the goal is just to give back and break the golden handcuffs that a lot of these, high income professionals and doctors are in, and say, hey, look, here's so many options you can do with your life. You can still practice, but you can do practice and this, or you can switch, you can pivot out of practice, or you can evolve your practice in a different way. But that's the goal. So that's the passion income. And then finally it's purpose income. Like, what happened tragically just recently in Texas, where the shootings, and, there's water shortages in different parts of the world. And so now we're gearing up people and mobilizing people and creating purpose income, where it's like, hey, let's create nonprofits. Let's create things. Is there a medical mission that we can go on? And you're doing all of this and you're mobilizing resources for the highest and best good of the world. And so that's the evolution of how your income should be. And so back to why real estate was so critical for me. By me learning how to do multifamily real estate, I essentially was able to buy 200, 300, 400 unit apartment complexes with my money, with some friends and family money. And then we were doing value add. We would improve these assets over time. Rental and NOI, net operating income, would go up, rental income would go up, and that would thereby increase the value of these assets in a short amount of time. And it's insane, the kind of returns you can get in a safe way versus being more cavalier, for example, in the stock market.
Yeah, we're in complete sync on what you just said. And I love that. What I think about is how many doctors, especially, they think their profit sharing plan is a necessity, like they have to do that, right? And all their partners, they almost, even if you think differently, you're stuck in that because your partners are going to want to do it, right? And but those assets, or those instruments where the money's being held, they're being eroded every day by inflation. But my multifamily real estate is growing, right, in value.
It benefits from inflation. Yeah.
Right. So if we know there's going to be inflation, and then we know that taxes have to go up, and we know all of these things, then we have to buy assets, not instruments. And so then it comes down to, how do we decide where we put our money? How do we, if we don't know how to underwrite a deal, then how do we find that? Do I go out and look for multifamily real estate? So talk a little bit about that.
Sure. If I was a high income, earner right now, I would say, okay, I know I have to always put something in the equities. Fine. I will give that to a savvy investment advisor, and maybe they'll do, low cost index funds, but I would not put the majority of my money there. I'd be a small portion there. Reinvesting in my group probably doesn't make sense unless they have like a surgical center or something like that, where there's some really good, strong profit sharing, and they're really generating a lot of volume. And you're really a business owner at that point, and it's not really anything to do with medicine. It just happens to be a medical facility. So that's another good place to put income. Next is, look, if I'm a high W-2 earner, I'm probably getting killed on taxes. And so I'd really want to figure out where I can start offset my taxes. If I'm a W-2 earner, can I become a K1? Can I be a partner in the practice? I would try to do that immediately if I can. And then with that extra income I have, I'd explore real estate as definitely a good place to put a significant portion of my money. Within real estate, there's multiple things. If you don't want to be active, then what I suggest is learn to be a really good passive, sophisticated investor. And so figure out what asset class you want to invest in. During the great, during the COVID times, hospitality got killed, student housing got killed, retail got killed, even office got killed. And so industrial multifamily seemed to be and self-storage, I guess, were the three sort of main highlights there. And so it may be a good place to consider one of those three asset classes. I'm partial, obviously, to multifamily. The reason why we love multifamily is, one, it's you get bonus depreciation, so you get a huge loss on your taxes, and so that's amazing. Number two, you get income because there's distributions done because of the cash flow, and number three, the actual asset appreciates over time. One, organically because you're buying in certain key markets, or number two, forced appreciation due to the value add being done by the sponsor operator. So that's a great place to consider investing. And how do you find good sponsors or investors? One, You want to make sure that this is what they do. They're relatively full time. Number two, they have a good track record. Maybe they've done at least 3 to 5 assets. Number three, they communicate clearly. Number four, when they say distributions, they don't mean return of capital, it's return on capital. Right. And number five, you want to talk to them. Hey, have you had a bad deal? Tell me about it. Hey, have you not been able to ever make a payment? Tell me about that. And if they have if they don't have the business background, but someone on their team does, that's perfect, right? And preferably you want someone who has a third-party property management company, because then, they can always fire that. It's hard to fire yourself if you're managing your own assets. So it's nice to have that little bit of a distance. And those are the things I'm passively invested in about 25 deals, Jim. And so this is what I look at when I'm looking to find a sponsor to park my money.
Right. Well, I think that was some great advice and very well communicated and organized. And I would tell people that listening, go back and listen to that again and write down those keys, because I agree with everything that you just said. So, you said something where you buy an asset and then you improve the value of that asset. And I think that people sometimes don't think about that. So you have this asset that's growing because of inflation, right? You have it's cash flowing, and we can increase that cash flow and the value by doing renovations and getting so many times that rents aren't at market level. And you analyze that. Another way to underwrite the deal is, where are rents right now, right? And as we make improvements, then rents obviously can be raised, but even raised, but then get to market to the market where the market should be. So talk to people about Viking Capital.
Yeah, absolutely. So Viking was essentially sort of like a side hustle, sort of a hobby me and my my business partner Ravi Gupta created in 2015. And literally we're like, we want to dabble in multifamily, how does that work? So we created a company. We thought we initially had we're of South Asian background, so we're like, hey, should we call it Saffron Capital, Teak Hill Capital? And then my friend's like, dude, that's too wimpy, man. I'm like, all right, man, let me get some testosterone. Let's call it Viking. So I was like, all right, good, we like that. So then what we realized is we're surrounded by people who don't know what they're doing with our money, aka doctors. I'm sorry if you're a physician out there. A lot of you are savvy, I get it, but many of you are not. But you're so smart in so many other ways. And so I wanted to help them, and I wanted to help myself as well in terms of, hey, I wanted to place my money. So we first started placing our own money. People saw our results, are like, oh wow, how are you doing that? Let me work with you guys. And so we started including them, and that's how we initially, if you're ever wanting to go from passive to active, the way to do it is to partner with someone who already knows what they're doing. And so that's what we did. We partnered with, and they call it joint venture or JV. So we did three or four JV deals, and we felt comfortable. We learned the lingo, we learned the jargon, the language, we learned the processes. We got down and dirty. We would go touch these assets, visit the assets, tour the assets, talk to people, and just get educated. While we're, in a way, you're sort of getting paid to learn, right? Because you're bringing capital and you're getting paid for that in a way. Then we realized that this is the leap of faith. We're like, can we do this on our own? And we said yes. And so we're like, it's not that complicated. If I can figure out heart surgery, I guess I can figure this out. And so I really think anyone can do real estate if they really are passionate about it, they're interested in it, and if they learn the right way. So we decided, let's go in. And so we started doing our own deals and syndications. And the first deal we had, we were runner up. We didn't win it. And then there's a murder on the property, Jim. And wow. This is in south part of Atlanta. It was 118 unit. It was one of our first deals. And then it was like a sort of a test of faith. The brokers came to me. Do you guys want it? The first group pulled out because they heard about we took a deep breath. We sighed. Then we all right, let's do our research and analysis. We looked at the crime in the area. We talked to the brokers. We talked to the police department. We talked to the tenants. We realized this is a random act of violence, and there's no pattern. And this is not that bad. This is not that like a D area. This was a C+ trending to become a B area. There's actually a lot of religious institutions around the area. So we're like, you know what? Let's move forward. And that one decision changed our lives, because we hit it after about 2.5 years of owning and managing it, we really did a great job, and the assets sold much higher than what we, initially anticipated. And our investors got I think a 30 or 40% return. They were ecstatic. We're like, yes. And then, we started moving forward. Now we've had hiccups and we've had, bumps in the road, but overall it's just been such an amazing journey. And it's led to where we are now, where we've done about, I think, 26 transactions. We have about $650 million of real estate we've transacted upon. We're in about 8 submarkets all over the country. And our goal now is really to help, investors, one, capital preservation is key. So we don't do dumb deals. We number one is never lose money. Number 2 is grow that money. And number 3, grow it efficiently with tax strategies. So that's what we do. We buy typically 200 to 400 unit multifamily apartment complexes, usually B and A class now, in top areas such as Atlanta, Phoenix, Dallas, Austin, San Antonio, Houston, Jacksonville, Tampa, and Orlando. These are our main markets. And so we like them because that's where everyone's moving. Because of the COVID, the demographics have shifted. People are going from, blue states to red states. People are moving from, big cities to smaller cities or suburbs. And so you follow demographic trends. You see where the jobs are going. You see where there's a supply and demand mismatch. And you come in with your business plan that's been proven already, and you implement that. And then you also build the broker relationships, which we've done. So that's what Viking does.
That's awesome. And how does somebody learn more about Viking and opportunities with Viking?
Yeah, if you guys go to vikingmultifamily.com, that's our website. All the information is right there. And then you guys can look me up anywhere. I'm on LinkedIn or on Instagram or Facebook, like that. So there's a short one to my Instagram. It's linkwithvic.com. It goes right to my LinkedIn.
Love it. And the podcast is Limitless MD.
I have a podcast that gives strategies on freedom, wealth, and human optimization, and that's called the Limitless MD Podcast. Yes,
I love that. I love I love that description of your podcast. Perfect. It is kind of amazing because I used to live in Dakota Dunes, South Dakota, and it's right across the border from Sioux City, Iowa, where there's 2 hospitals that serve not only Sioux City, but a lot of rural areas around there. And the doctors had a surgery center in South Dakota because there's no state income tax in South Dakota. They all lived in South Dakota, did as many procedures at the surgery center as they could outside the hospital. Which there was, we won't get into the conflict with the hospitals, but they allowed it to happen because what were they going to do, right? And this surgery center was probably the best asset that any of these doctors had. It grew in value, and they eventually sold part of it to one of the hospitals, and they all had a windfall. But I saw some doctors that just went to work, they were doctors. They would maybe, like you said, dabble in franchises, dabbles here or there. But then you saw the business, very rare. I mean, maybe less than 5%. The doctor that had other businesses going on and real estate and, maybe it was pain clinics if they were an anesthesiologist, and there was, the surgery center, and you had all these other things. And those doctors always were head and shoulders financially above the doctors just slaving away every day. And I think the key is finding mentors, finding people you can work with and you can partner with, that you can trust, and that you have that you have something in common with, that you can understand how they think. And so I think it's really, really cool what you're doing for doctors, because there's a lot of doctors out there that are some of the worst business people I've ever seen. And so I used to say, I don't want to work with doctors because of that. But I love and I've gotten over that because I've learned how to work with doctors and show them to break away. But I love that you're serving that community.
Jim, I want to issue a challenge to your audience. Number one is find someone who's really successful in your sphere of influence, business person, entrepreneur, someone. Take them out to lunch, pay for the lunch, and pick their brain, strategize, understand how they think and how they got started. You'll realize everyone paints, wealthy people or financially successful people as, they're curmudgeons or they're not very generous. but in fact, most of the generous people in the world that I know are the most wealthiest people, you know. And so they're wealthy not only with their money, but they're generous with their time, and they're generous because they want to help people. It's true the bottom is crowded, but there's a lot of room at the top, my friends. And so each one help one. So literally reach out to people who are successful and glean that information from them. And number two is I want to get people out of the scarcity mindset. Even if you don't have, you know, $10 to your name, you can still live an abundant lifestyle. And abundance is a frequency of energy. And I'm probably going to get a little woo-woo on your crowd here, but I really believe in this kind of mindset where if you live abundantly, abundance will come towards you. So what I've done with a lot of my coaching clients is I tell them, look, donate $30 a day for 30 days to 30 different charities and just see what happens at the end of that. And you just feel like, man, I'm helping these people. I'm helping these people. You help. And you just feel so proud of yourself. You feel so happy. You feel like you've made such an impact. And then just notice like it's going to come back to you. There's a law of circulation, a law of energy, a law of money, and a law of reciprocation. So I really believe in these things.
Absolutely. Really well said. Again, I love that challenge too, the 30-day challenge. I think that's really cool. How does somebody find out more about your coaching?
Yeah, absolutely. It's vikramraya.com. My first name, last name.com is my website. So there's a ton of free resources there. We actually have a free community we created called the Physician Wealth Accelerator. So you're more than happy to join that. And yeah, our team and I can reach out to you if you're interested in learning more. But that's a good place to get started.
Awesome. Okay, Vikram. So if God came down from heaven and told you that you could only retain the knowledge that you've received from one book that you've read, what would that book be?
Yeah, that's a challenge because you and me both, we love books, right, Jim?
Yeah.
So, it would have to be Gary Keller's The One Thing. Gary Keller's the guy who's helped start Keller Williams Realty. He wrote a fantastic book. It's part mindset, it's part time management, it's part life management book. And really, it just takes the Pareto Principle, which is 80-20, right? 20% of your inputs lead to 80% of your outputs. And he goes, let's go extreme Pareto. What's the one thing, 1% that leads to the 99% of your results? And that one philosophy has really, stayed with me in my life.
You know, what's funny about that, when I first heard that in my 20s, the 80-20 rule, I looked around our firm and I thought, there's not 20% of the people doing 80% of the output. It was more like 5%, or if I was really kind, 10%. And so it's funny that, Gary, he just said, yeah, Jim, you're even too optimistic. It's 1%. And it's really true. And as you can focus on one thing and do one thing really, really well, it comes back to what kind of Dan Sullivan would call unique ability, right? There's something that you do better than anybody else. And people go, no, there's nothing I do better than anybody else. But there's one thing that you do better than anybody else. And if you focus on that, you'll have a huge impact.
Yeah. And you know what? I know you're going to let me have another book, so I'm going to just throw it out to your audience, if that's okay.
Yeah, absolutely.
All right. Number 2 is a book I read recently. And since you mentioned Dan, that's why my mind triggered that thought. It's The Gap and the Gain by Dan Sullivan. And this concept is good for all of us, as we're all high achievers. We're all entrepreneurs. We're all trying to be successful, and we just push ourselves and we don't show enough compassion. But we have to realize, yes, we're always going toward this mythical destination, which keeps being pushed back because we achieve it. And then there's another one, but we rarely go backward and look and say, hey, how far have I come? And really looking at the gain that you've had, if your goal is to achieve X number of income or wealth, and you've hit 90% of that, revel in that, cherish that, enjoy that, versus, man, that guy in front of me, he's had twice as much as me. So, and then you feel crappy again. So you never give yourself that victory. And so it's hard to consistently push yourself forward if you keep beating yourself up. So it's a great book. There's a lot more into it than that, but it's really reflecting on where the journey you've been, the progress you made, and being grateful and thankful for that. And then saying, okay, where do I want to go? And Ed Milet calls this blissful dissatisfaction. You're happy where you are now, but you know you want to still grow.
I love that. And that's one of my favorite just concepts. And we have conversations on our team, and I'll say, you're in the gap. I mean, and we live in the gap. I would tell you daily. I think most people do, but it's realizing when you're in the gap to turn around and look at the gain and see how far you've come. And like you said, celebrate that. Those are two great books. And I think from a coaching standpoint, I could see why your coaching business is thriving, because you deliver the material very precisely and enthusiastically and confidently. And I think that's important in a coach, because you got to get people to follow you in the abundance mindset is everything, knowing that you can have anything in this life that you want if you just focus your efforts on that. So anything that we missed, Vikram, before we wrap it up?
I think it was an amazing show, Jim. Thank you again for having me, and congratulations to your listeners for all the journeys and success they're going on.
Thank you very much for coming on.